Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boyce-No with my co-host, Kevin Casey. Today, we are joined by the illustrious, amazing, he loves it when I use superlatives, Rob Chrisman. Rob Chrisman, thanks for being here today.
I'm happy to be here. Thank you.
Good to see your face. All right, kids.
And
Well,
Santa tie.
yes. And can we please hear your best ho, ho, ho?
Ho, 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 green giant. Oh,
Oh,
wait a minute.
okay.
Sorry.
Okay, you're gonna need to work on that. We'll
We
circle
should,
back later. Geez Louise, talk about epic fail.
we, we, we should get Libby's. Was it Libby's, the green
Oh my
giant?
God.
Libby's on the label.
We should get Libby's as a sponsor for this show. We are looking for a sponsor for this show. So
Didn't you work in a can factory as a kid or something? What was it?
a can factory. I worked in a cannery. My
Cannery.
dad
It's
My
close.
dad, after he got out of the Navy, worked in a cannery in San Jose, and I worked there in high school and college in the summers.
Wow.
Wow.
See, I picked strawberries and garlic in the fields, backbreaking work, and you worked in a cannery. All right. Well,
I've been to a cannery, but it was a beer cannery.
you
It was
know
really
what?
cool.
That doesn't count. Jeez Louise. All right, kids. It is December 17th. I can't believe it. You can't believe it. But if you have not renewed your NMLS, you might want
You're out of
to.
luck.
Hey, stop it with that doom and gloom. You might want to think about it today, though, and hope to God that you are renewed by the end of the year. So make sure you get that done. If you haven't done your continuing ed, good luck. We hope the best for you, but we'll see. And with that being said, it's another busy week in economic news. So tomorrow, the Fed wraps up its 2-day meeting and it will issue not only its decision on what they're doing with Fed funds rate, which there's a 97% chance they're going to lower by 25 basis points, but they will also be releasing their summary of economic indicators and their dot plot. And if anyone has blocked this out because the last couple months has been so lovely in the land of mortgage rates, the last time they issued said summary of economic projections and dot plot, the market went to HE double toothpicks. So our market, the rates. So you might want to just,
I want to lock it today.
Yeah, I locked last night. I'm feeling pretty good about that today. And yeah, make sure that you are not letting this little chance to slip away or thinking that it's a good idea to gamble. Maybe, but also just in case tomorrow isn't enough for you, Friday we have PCE. That'd be personal consumption expenditure. Now, according to Rob Chrisman, who cares because it's coming out after the Fed comments, right, Rob? But it still matters.
I'm still grappling with HE double toothpicks. Did you grow up in Beaver Pond, Iowa or something? Or where did you get HE double toothpicks from?
You've never heard of HE double toothpicks.
I've heard
Not
of
not
Tracy
since
double
I
hockey sticks.
not since I went to some evangelical serpent charming service in Tennessee.
You know what? That's another conversation for Friday then. I mean, we could just start making a list. I'll tell you about my evangelical adventure at some point. So, with all that being said, that's astounding. You haven't heard of that. So, your thoughts on the week?
The Fed will raise a quarter.
Lowers.
I'm
Yeah.
sorry,
Or
lower
that's a
quarter.
50% base switch there.
That'd be something. Raise a quarter.
Oh, not
You heard
That
it
would
here
shock the
first.
market.
yeah.
It's all
That's
priced
not
into the
market.
market, and the bonds. I think we could be looking at these mortgage rates for a while.
Yeah. It was
And
it
if you like them, good. If you don't, well, hope is
Business
not
plan.
a
It's not a
plan,
business plan.
a strategy.
Yeah.
Yeah,
yeah. Well, you know our little ditty that we like to sing on here.
I don't.
If you see a rate you like, lock it in. Yeah. The whole thing is, and I explained this to my client, which I think at some point his head was about to explode, but I said, we could chance it and maybe it'll get better, but it is unlikely. And considering our inflation situation for the next couple of months, because right now, as we keep talking about every week, we are replacing very low numbers from last year with this year's numbers. And even though this
Yeah.
number is year's numbers are not bad at all. It make the year over year numbers.
It's
they
gonna
make-
look like inflation's up when it's actually, it's doing okay.
Exactly. So it is something that we're going to be dealing with into, so January, we're going to be replacing much better or worse numbers from last year. And so the numbers will look better, but we won't see that till February. So again, people need to get their transactions done. I have a few people who are really pushing. They want to get things done by the end of the year. I mean, December is going to be my busiest month, probably in years,
That's
actually.
great.
And it used to be, I've mentioned this before. December used to be my busiest month of the year every year. And then for a few years, weirdly, I don't know what happened, that kind of fell off and now it's back. But part of it is
I think it's because you wait to the end of the year, you procrastinate, and you just get all your business closed at the end of the year so you can make your year work.
well,
That's
gosh, thank you for such a positive spin on this, Kevin. But maybe it was something more along the lines of this year has been it's been a real transition year, hasn't it? I mean,
Oh, yeah.
I don't know what you're hearing around the country. I'd like to know what you're hearing from other LOs as far as how has this year been compared to last year? And then what is the sentiment for 2025?
All in 3 sentences.
Nope, you have longer than 3 sentences, so knock yourself out.
Oh, ask a question.
Okay, so when you're talking to LOs around the country, how do they feel about 2024 compared to 2023? Is it better? Is it worse? Are they feeling more optimistic? Are they waiting for the rate still, or they figured out how to go get different business? What's going on? Okay, that was more than one question. Try to
That was
keep up.
holy smoke. All right, let me repeat. Ask one question.
Sorry, sorry, I can't.
Uh,
Okay, compared to
no,
last year, how's this year?
stop.
There you go.
So the it's very situational in that depending on where that loan and by loan officer I mean brokers, I mean
Yes,
anybody's licensed, right?
yes.
Depends on where they work. It depends on what kind of business they specialize in, and it depends on how old they are. So if you are a relatively new loan officer, you're going to have a different attitude than somebody who's 65 years old and who, has been through a few
Yep.
business cycles and they've got grandkids, in the neighboring state that they'd rather spend time with than listening to a borrower wonder about locking in a rate or not. The newer originators tend to be more enthusiastic and they don't mind expending the energy, making the phone calls, trying to build that referral network rather than living off an existing referral network that may be fading somewhat. So if you are an older loan officer or somebody who's not enthusiastic about it, it's kind of like, oh, oh my gosh. I mean, I won't say they're wringing their hands and saying "woe is me," but just the level of energy is less than somebody who's been in the business 5 or 10 years or even
Yep.
15 years, who's out there busting their butt. And so that's a little bit of a generalization because you do have people on, in their 60s or even 70s who are out busting their butt and they realize they've got to make those calls and they're more enthusiastic about the future, about 2025 than maybe somebody who's 30 years old, who's only been in the business 5 years, but they're saying, damn, this is tough. My buddy's an Uber driver and he programs in Python, 4 days a week and he's making 3 times what I'm making. Maybe I should do that. So once again, it depends on kind of their age. It also depends on where they work. For
Yep.
example, I've been surprised recently in the last several months. I've done some work or I attended some credit union events and met many credit union originators. And I know a lot of people don't like credit unions, but they do have a somewhat unique business model and they do tend to have portfolio loans. And the originators tend to be relatively I won't say underpaid, but paid less than an IMB originator. if you have an IMB originator who's used to making a point or a point and a half, and you're up against a credit union for that loan, and that credit union originator is only making 40 basis points, that's like, 3/4 or a point difference in compensation and so the IMB sitting there saying, well, I can't, Rob, what do they, how can they offer better rates? Well, it's because their overhead tends to be lower in compensation. So credit unions right now tend to be, and banks tend to be more optimistic about heading into the winter and spring of 2025 than some of the IMBs I'm hearing about. And then lastly, as I mentioned, it depends on what you're specializing in. If you're specializing in refis, then there are refis to be had. They're not falling out of the sky like 4 or 5 years ago, but they're out there. If you specialize in purchases, yeah, we're heading into the winter months, and builders have underbuilt for years now. But there are for sale signs out there. So it's you can't. I will argue that you can't just say what are the LOs out there saying. It's very dependent upon the situation.
Okay, that makes a lot of sense. I always take offense to the whole age thing, but you totally have a point because I talk to people in the industry who have been, in it as long as I have, some longer, and
Yeah.
they are
You're talking
definitely,
about the grandkids.
yeah, they are all about like, let's just dial it down. And I personally, who am in that, I've been doing this for 35 years, and I am 157 years old. And I'm so excited about what's coming and continuing to hone what I'm doing and make it better and try new things. And so it is partly age. I get it, because
Yeah.
people
Well,
just
the other thing too about
grow
your
up.
age is your group that you've been working with all these years is also aging. I don't know how that happens.
It doesn't
But I'm
matter.
noticing that
It
with real estate agents, as real estate agents get older, they
Oh,
they tend to focus on listings versus working with buyers. And suddenly those real estate agents that used to refer you all these buyers all the time, they're not working with buyers anymore. And so therefore, oh, they don't like me anymore. No, it's they're not working with buyers anymore.
Yeah, it's a fascinating demographic discussion in general of the population, but also the demographics of our industry. And they talk about our aging industry. And Audrey, I know I've lost track of the number of times when uh, people say, "How old is Audrey? Is she like 40 or 45?" And I say, "No, she's actually a great grandmother." They're always very surprised to hear that. Uh, and so uh, I'm kidding about
They're great.
me telling them that you're 40 or 45. But anyway, I
be careful.
it's an interesting situation. It's a fun discussion to have because I mean, there's so many things that about our industry that I find interesting and kind of fun, but it's just be you just want to be you don't want to put your head in a hole and just do nothing. You need to be aware of what's going on in our
Yes.
industry and with your competitors and with the economy and so forth. And just be and say, well, yeah, I'm 65 and I've got grandkids I'd rather spend time with, but I want to do this for another, 7 years. And so I got to figure out how to do it.
Yep.
Yeah.
And it's
Yeah,
just different.
exactly. And by the way, this is what keeps you young. If you are winding it back and you're losing interest in new things and trying new things, you're going to be old and dead soon. I mean, my son's orthodontist retired and dropped dead 2 months later. So be
That
careful.
happens a lot.
It's actually a statistic, I think, and I don't know what the actual number is, but a lot of people who retire don't last long. So you've got to have a full life if you're going
Mhm.
to do that. But with that being said, if you're going to stay in the industry, engage, learn, it is it is changing constantly. And Kevin and I, when we're teaching NMLS every year, and we're talking about people who occasionally drag their tails in there going, oh my God, I have to spend 8 hours. I just want to slap the crap out of them and just say,
Well, you just want to slap everybody. That's okay.
what?
I said you want to slap everybody.
I have never slapped a single person in my life. I do occasionally have that that desire because I'm like, come on, wake up. We make a lot of money, not in 23 and 24 maybe, but normally. And you have to do 8 hours of continuing ed. I'm teaching classes full of CPAs and they have to do 40 hours a year. That is a week, by the way. And so again, the bar is not very high as far as what you have to do to maintain our
Yeah,
license.
or even get in.
But to stay on top of it and really be an asset to your borrowers, you've got to do something. And, like people who tune in here every week, or, it doesn't have to be us, but it should be. But they're engaging in what is going on out there. And especially if you're sitting at home by yourself, because that is a whole different conversation. We used to go to an office every day. That's how we learned the business, being around other people, hearing what they were working on, what were their solutions. And so, we lose a lot by not being around other people. And it is, again, I think it's something that we need to think about. Like, what are we going to do in 2025 to get out into the world a little more and be around others? And,
I
it's
remember Mountain West Financial.
oh, wow.
If you think about the founders of Mountain West, they shared an office for, Gary Martell, Mike Douglas. I mean, they shared an office for decades, 20, 30, 40 years or something.
Mhm.
I won't go, I don't think, I mean, that's one extreme, but the other extreme, to your point, is people have, they've shifted, many people have shifted to working from home, and you lose that water cooler intelligence,
Yep.
that muscle memory of, hey, Audrey, how's it going today? Oh man, I've got a tough deal. I'm trying to finance a church here in California.
Yep.
And I'd say, well, yeah, you should go to www.mortgageelements.com and look up commercial loans, and many of those commercial lenders will finance a church. That kind of water cooler.
Yes.
I stopped by to get some M&Ms off your desk or whatever it is. People don't have that now.
Okay. Well, that's kind
With
of why we started the show, because we're kind of replacing some of that.
Well, Terry Buckman, who many of us remember fondly, used to refer to our show as the water cooler. She said we were the replacement for that, which we are all missing. So, yeah,
Did
we
she
embrace that.
retire?
What she did, sadly. Man, what I miss her so much. She was so smart. And so, those are the people that I'm like, oh God, please come back. Like, you're
Yeah.
great.
I mean, not to throw my kin into this, but or my spawn and kin, but Robbie and I talk 3 or 4 times a day, and it's not always some in-depth conversation about the meaning of Fed funds. Sometimes it's just, hey, what are you up to? And we also email a lot. And I think I'm trying to instill, I mean, I can't instill 30 or 40 years worth of capital markets knowledge in him, but I can help.
Yep.
And
Exactly.
so I do, we try to do what we can.
Well, as I see companies forcibly retiring people who are older. And when I say older, I mean like my age, who have plenty of energy and desire to keep going, and they're being pushed into retirement. And I keep thinking, okay, I get we need to cultivate the young and bring them into the business and help, but to help them grow, make them a team. That's the way forward. You and Robbie are a team. You
Yeah.
you are a resource for him, and he gives you perspective that you may not have otherwise. And it's a real win-win situation. And I think that in going forward, it'd be great to see that at the wholesale level. Don't get rid of your older reps. Older. If they are still smart, viable, and have a desire, team them up with someone who's younger so that the younger person, they can bring in, oh, what about this tech idea we can incorporate, but they can learn from each other. So I think that is something going forward in 2025 that I really hope that people embrace more than they have, instead of getting rid of these wonderful, amazing humans who are still an asset, but they've reached a certain age. And so now they're out. There's so much ageism. It's crazy. Where you
So,
laugh?
so you've used a word a couple times in this. Uh, the word is normal, which I want to come back to, but I wish, if people are inclined to chat, please do. I'm trying to figure out if elderly has become a politically incorrect word. Like I can't use the word elderly anymore because no baby boomer wants to be called elderly. But let's face it, the baby boomers, I think that generation began in the 1940s. And they're in their mid 70s, or some of them maybe even
Yeah.
older. And at what point does somebody become elderly? I mean, they are in the old vernacular elders, right? Sitting around the campfire, oh, elder, they're elder, they're an older, wizened person. But elderly seems to become this, oh, I don't want to be called elderly. I want to be called
Well,
senior.
I run into people that are well younger than me, and I think they're old.
Well, okay, just for the record, anyone on the screen right now who is a baby boomer, raise your hand.
On the screen?
Okay. Oh, look at you guys. Okay, so we've got two baby boomers here. Do you object to be called elderly?
What, Audrey, I know that you're a grandmother. Are you like from Mississippi? Did you have a child when you were 20 and then they had a child when they were 20? And so at
I am
four,
not a grandmother, but I could have been. I could be for sure. I'm definitely old enough.
All
And
right.
in fact, I bet you if I really had done what you're talking about, and my children had reproduced at a young age, I could be a great grandmother actually. So I am not, yeah, I'm not saying I'm young, but I'm not a baby boomer. So with,
oh, well,
and I think Louise Woods is telling me that, is that 32 in the chat? Does that mean
Yeah, that's just she
how old I
put 32. She's
am?
really
That's cool.
close.
Yeah, so close.
Very close.
Except I have a child older than that, but whatever, let's move that along. Anyway, to your point, it is, I don't know whether it's politically incorrect. I don't hear older people complaining quite as much, at least about that, as maybe someone else might. So bottom line is we do have older people, but I would say that 50 today is definitely different than 50 when I was growing up. I mean, 50 when I was growing up, people look different, they acted different. And to Kevin's point, there are people who are our ages and younger who can't keep up, like they're not. Anyway, so I don't know why we're beating
I have a group of friends. We're going to be playing golf this weekend, and I'm the oldest of the group, but I'm not the oldest looking of the group. Let's leave it at that.
That's what he thinks. So
I play basketball here in Marin and San Rafael, or I should say Marin County, and Saturday mornings, and there are people there, people who play doing full
Yeah.
court in their 70s. And to Audrey, to your point, when I was growing up, if anybody was in their 70s, phew, boy,
very
they were
old.
sitting there waiting, reading Reader's Digest and waiting for Wide World of Disney to come on the TV. So, yeah, it's changed, but
Yeah.
baby boomers are not, they won't live forever. They're not invincible. And it's interesting, as I said earlier, I want to come back to this term, the normal, like the folks who are kind of waiting for a normal market to return, because they've been through business cycle after business cycle and they're in their 60s or 70s, and they want a normal market. Audrey, maybe you could tell me what that means, a normal market.
So I think it's funny because I told Rob when I called him, I said, I want to talk about what is a normal market because I keep seeing all these articles about will 2025 be a normal market? And I'm like, what does that even mean? Because in my experience in 35 years, it's never the cycles are normal. You're always going to go through a cycle, but there is no normal. So this was driven home by a friend of mine who I've known since high school, and she lives on the East Coast. I live here on the West Coast. And every time I would talk to her, she'd say, how's everything going? And it took, many, many, many years. But at some point, she pointed out that every single time she asked me how the mortgage market was, I said the word crazy. And so apparently a normal market is crazy because there's always some extreme. Like I feel like we're never in the middle of anything. So it's either feast, famine, we're so busy. Do you remember during 2020 and 2021 and everyone kept going, oh my God, I have so much business.
So busy.
I'm
Yeah.
so tired. I just need a break. And to your point, I wanted to slap the crap out of him and say, be careful what you wish for, because we know that this is a cycle and that this is going to end and you're going to be sorry. And so I've never estimated correctly the extent to which things will go in the other direction. And so I did not understand that 23 and, well, 22 and 23 were going to be more like 93 and 94. And so it was horrible, but it's a cycle that now we're
Yep.
cycling out of it. It's coming, we're coming up, I think. What do you think, Rob? Are we going to have a better year next year?
So I want to go back before I go down that path. The next time, Audrey, you see a marketing piece in writing, can you, and assuming that's in an email, normal, fire it off to me, because I will argue that there's no such thing as normal. And normal to me almost sounds like, oh, a normal Norman Rockwell, a painting of a town, and everyone's kind of, coming from church, or going, we're, chatting in the town square. It's just kind of normal, kind of quiet. I would say that the successful people and the successful companies that I've seen, there is no normal. They're always doing something that's unusual or aggressive or thoughtful. And the folks who come in and punch the clock and then go home, a lot of those folks should work for the government, frankly.
Yeah.
So like I said, next time you see somebody use the term normal,
Okay.
I don't think there is a normal. And then a normal market, does that mean a normal real estate market?
Right.
Does that mean normal interest rate market, bond market, stock market? What's normal?
I think normal is boring.
Well, and by the way, that Norman Rockwell picture didn't reflect what was really going on in that little town, where the drunk was beating the crap out of his wife and children, and this person hated that person because they weren't the same religion or color. And so, like this idea that there's ever whatever normal is, I don't even know what that is. So we agree that there is no normal, and that 2025 is just going to be its own adventure. And the way to deal with that is to buckle up and try new things and be adaptable, which we as loan officers have always been great at, and be ready for whatever's coming next, right?
Yeah, I mean, haven't you switched your business from Fannie, Freddie, FHA, VA all into, non-QM and bridge loans?
It's
Yeah.
not all, but yes,
Well, now it's shifting the other way.
it's a huge chunk of my business this year has been private money and definitely non-QM. And so this idea and I've had reps tell me that they remember when I would look at them and go, oh, I don't do those kind of loans. I didn't even understand how to talk to somebody about a rate that wasn't a Fannie Freddie super competitive rate. And now I really truly believe that the way forward is that you have to be doing everything. I mean, you really do. I mean, and it's not hard, people. It really isn't hard. You have to be a student of the industry. You have to find out what else is out there and be open to what comes at you, and be willing to have conversations you've never had before with people. So, I have investors who I kept trying to squeeze into the Fannie Freddie little tiny teensy box. And now I can do them non-QM on a DSCR, and I don't want to kill myself, and neither do they. So I just think it's so great because we have options, so many options, right?
You should, that's who should sponsor this show, Audrey, are the non-QM investors or the private money investors who are trying to get their name out there. So
Yeah, they should. So if you could find them and send them our way, that'd be great. Because
I'll go dig them up.
Kevin and I pay for this show, which we're kind of, after all these years, it's time for that to shift. So with all that being said, it is, again, obviously we want Fannie and Freddie. So I'm having a conversation with somebody recently. They just closed on 2 investment sales, and they have a 1031 exchange in play right now, and they're trying to find a new investment property, right? And as I'm talking to him, you know, immediately I'm thinking, okay, well, DSCR, but I always check both ways. And one of the things that you always have to make sure of is, are you ever going to live in the property? If you're doing a DSCR, a lot of those docs say that you can't, and neither can any of your family ever live in that property. Well, this person is thinking he's going to do a 1031 exchange. It's going to owner occupy or rent it out for some time and then eventually move into it. Okay, that's a whole different story. So now I really do need to be looking at maybe Fannie Freddie because they don't have that. You have to, you know, have it be an investment property.
How enforceable is that though? Never to live in the property.
Well, I
Yeah.
feel, I mean, if it is it in the deed of trust? If it's in the deed of trust, it's enforceable, right?
Who's
Oh.
going to,
We're
well,
gonna do all sorts of crazy things right now, aren't we?
I mean, lives change.
That matters not at all. That
See, I
doesn't
could never
matter.
be a compliance person. I
Yeah,
would, if somebody came to me, what's going on behind you there, Roger? Was that a wolf? What's going on there?
I hope not. God, I don't know. There's, it's nice.
Kevin, did you see that creature? It was like half man, half wolf.
I did not see it. No.
Oh my God.
I hope that you have a dog and that isn't some banshee,
Don't get me
whatever.
started on my doggy.
So
Okay.
anyway,
Yeah.
yeah, I couldn't be in compliance because your things change, and you hear about these buybacks from Fannie Mae and Freddie Mac, and they find out that they bought a washing machine 3 days before funding
Yeah.
or what it might be.
Yep.
Borrowers continue their payments, but Fannie Mae or Freddie Mac go back and they say, "Hey, this violates the DTI, whatever, and we
Yep.
want you to buy the loan back." And then
Yep.
it involves into a fist fight where the lender has to hire an attorney to deal with it, or has to dedicate their staff to defending it. But with these loans that you say you can't ever live in, well, what if the person's spouse dies or the person's grandkids move in next to that house? Well, and I want to live next to them. Does that mean
Okay,
Yeah.
listen. I'm just going to tell you what I tell my clients. You're trying to be logical. There is no room for that in mortgage lending. You need to
Well,
follow
there is and there isn't.
no, stop it. You read your deed of trust and see what the heck that says, and then you follow it. Unless you want to live wondering whether you're going to get, if you have the resources, if someone knocks on your door and says, hey, by the way, you're violating your the terms of your loan and you need to get the hell out, you're okay with doing that, great. Or you need to refinance immediately. If you're able to do that, great. But for the average person, they don't have unlimited resources. And so we need to make sure that they are protected and know the risks. So with my client, when he's telling me I'm going to move into this place in 2 years, then I make sure that I am not putting him into a loan that is going to have a problem with him moving into it in 2 years, right? This is why we talk to our borrowers. This is why we tell our borrowers they should not push a button to get a loan, because they're not going to get that kind of information if they do it, right?
Yeah. Speaking of which, I came across one today, guideline. I'd never seen this before. Maybe I'm totally been missing it, but a lender guideline stated that if the person was eligible for Social Security but had not started to draw on Social Security, they would use that eligibility income to qualify for the mortgage. I was like, I have never seen a lender do that. Am I missing that?
Okay, first of all, I like gobsmacked that you read a guideline.
I know. Well,
I don't even know how to process that idea. Number two, I want to read the guideline too and see if we read the same thing. And number three, holy schmoly, really?
that I thought that was brilliant. I've always thought that. It's like, well, listen, if the person's eligible for retirement and they could show this much income on their retirement, they should be able to use that to qualify, because if they need it, it's there. But they're, oh no, they haven't started drawing their Social Security, they can't use that income. I mean, that's a brilliant way to, bridge the gap for somebody who's
That is.
just right there.
Where did you read that guideline? Can you find it again, or was this something?
Yeah, I'll shoot you the email with it.
That's crazy. Okay, that's amazing. Yes, Rob.
where does one read guidelines? Is it all on all regs?
There are a number of places to read guidelines, but then you have to read the guideline. You can Google it a lot of times. Like you can read, I mean, I'll Google a Fannie Freddie guideline, but I also get on the phone and talk to a rep. That's why these reps who actually have, make outgoing phone calls or answer their phones are so great, because I want to make sure that we don't have an overlay on top of whatever the, conventional guidelines, and there are so many of them, right? And by the way, going back to Linda Connor, who is with Mortgage Education.
Was she in the Terminator? All right, go ahead.
No, well, not this Linda Connor. Anyway, she is one of the owners of the continuing ed company that Kevin and I teach for. So she was pointing out that on this DSCR loans that you cannot move into eventually, you can't do that because to qualify, you're using the income from those units to qualify for the loan. It's all based on cash flow, right? So, and if they move into it, they have no cash flow. Therefore, how would they make their mortgage? Blah, blah, blah. So she has a great point. Thanks for putting that in writing so that I remember to say it. And I just am amazed at the number of people in the chat who are saying that, okay, here's Kevin. He says, I resemble these remarks about age. I started in January 1976 and I keep reinventing myself every day. And we have Jim who said, I'm 70 years old, originating. I work because I enjoy it with no plans to retire in the next 5 years. I love my job. 39 years in the business and counting, definitely a senior in age, but not a senior in living. I'm stuck at 28, looking for new ways to create business in an ever-changing, challenging market. These are the attitudes that you take forward. These are, no matter what age you are, it doesn't matter how old you are, because when you're younger, what are your deterrents? You have kids and you have to, be the coach of the soccer team, and you have to be room mom, which I was for 2 kids for, while they were in elementary school. But those are ways to get business, but they're also exhausting, right? So every age comes with its challenges, and you've got to you have to retain a joie de vivre and enjoy life and look forward to what you're working on next. And so anyway, okay, let's talk about buybacks for a minute. Rob. Oh.
Somebody asked Kevin a question in the chat. Maybe Kevin could answer that while it's still fresh in the collective memory of.
Oh, we already asked him to find it.
I am finding it right now.
Kevin
All
will
right.
find it when Kevin checked out as soon as we said
Well,
that.
no, I was looking for the guidelines so I could share it with somebody here, and I just found it.
Okay, great.
2 years history not required. Eligibility for Social Security, but delayed payments are eligible to qualify.
And
How's
where
that?
did you read that? Who is that? A Fannie Freddie guideline?
No, that is a private lender. That's
Wait,
an
private or
individual.
non-private?
That's a bank. It's a bigger bank.
Interesting. Okay, we're gonna have to run that up let's see if anyone else has that guideline besides some independent bank. That's really interesting. Really, really interesting.
And Jim, reach out to me individually. I'll share it with you.
Well, no, send me the thing. We'll embed it in the YouTube channel too, also. So
All right.
yeah, make sure.
Have you ever heard or read why train tracks are the size that they are?
Yep.
Oh, okay. No, I have not.
You
Please-
haven't?
No, I have no idea, weirdly.
You're not just saying that?
I'm definitely not just saying that.
Well, I'm dramatically paraphrasing the story, but if you want interesting reading,
But
go to
it
a
also
search
relates
engine.
to the width of the space shuttle.
What's that?
Yeah, the same rationale as to why the train tracks are the width they are rolls right into the width of the space shuttle.
Okay, let Rob finish his thought. We don't want it to go
I
flying.
didn't know they went that far, but yeah, I mean,
it keeps going, it keeps evolving.
Well, it goes back to like how wide chariots were during the Roman Empire and the ruts in the road, and then the size of the road, and then the size of this and the size of that, and bring it forward, 2000 or 2200 years, and it determines so much of like the width of certain things. I would imagine the same thing happens in guidelines, and that's why I brought that up.
Yeah.
Because the guidelines don't go back to, the Roman Empire, but they do go back to, GMAC or RFC or household or beneficial or whatever it is, or Fannie Mae and Freddie Mac. And you could probably trace back guidelines like what makes a bank accept or not accept some little twist that may seem of little consequence, but there's some reason why a bank or a credit union or investor had put that in there. Maybe they had a loan in 2012 that defaulted because during the underwriting they accepted some income, and so then they said, well, we need to we should stop accepting that income, and then they do it, and then no one ever looks at it again.
Yep.
I have joked around for years that they have not changed the underwriting guidelines since dinosaurs walked the earth. And I think what happens at the Fannie Freddie level is they come up with these guidelines and they don't change a lot, right? Like the basis of them. And then lenders follow them because they're afraid to deviate from anything. And they're afraid if we don't follow it exactly, it's not a guideline, it's a rule, right? They don't look at it as, well, we'll just it's not a
I-
guideline. It's a hard and fast rule because they don't want to buy back, right? So
Along those lines, if I may interject,
please.
like I remember when AmeriHome was invented, and they didn't have some non-owner adjustment. Maybe they didn't have any non-owner occupied fee
Hmm.
because they were brand new and they didn't have a servicing portfolio. Whereas anybody, Countrywide or Wells Fargo or Chase, anybody who had hundreds of billions or trillions of dollars of servicing, they were able to look at their servicing portfolio over the last whatever period of time and say, look at this, there's increased, we're losing about a half a point on these loans. So we should put that price adjustment in on our rate sheet. And so, as a capital markets person, of course, you're going to sell that loan, that non-owner loan, to whoever's going to have the least price hit. And Wells Fargo would be there with a half a point price hit. And if AmeriHome had no price hit, well, that loan's going to go to AmeriHome. Well, what tends to happen then, of course, is that every non-owner loan goes to AmeriHome, and AmeriHome says, "Whoa, Nelly, we
Yep.
need all these we're getting adversely selected, so we're gonna match everybody else and put the half point hit on there, and settle everybody down." And that's kind of what happens, I guess, with guidelines, or at least more prominent guidelines, is you don't want to be adversely selected against because your guidelines, incorporate income that everyone else doesn't, for example.
Right.
And then pretty soon you realize, oh, we're getting a lot of these loans that whatever. It's interesting. That's what makes this industry interesting, right? It's this constantly evolving, that's constantly changing. And so there is no normal.
There is no normal. We can thank the GSEs for making some of the guidelines so and the pricing, the LLPA, so egregious that the non-QM lenders have really stepped up to the plate, and they've really, really created a valuable service for us, for our clients, so that we used to get tax returns that had negative numbers on them and just toss that borrower away because you couldn't really do much with them. And now we have a million options, right? And so I think some of the guidelines may be based on, somebody's experience, but I think a lot of them are just nonsense at this point. And especially things, I mean, when they try to tell us that the LLPAs are risk-based pricing, I'm like, or any of the pricing is risk-based, I'm like, that's bullshit. Whoops. That's not true. Because you cannot show me an algorithm. I have been beating people at the GSEs for years. Just
Yeah.
show me
Show me the algorithm where cash out.
show me your stat, not even the algorithm. Show me your stats that tell me that a cash out refinance at 20% LTV is less risky than an 80% purchase. Or that, you know what I mean? Like, how many defaults do you have on a cash out refinance below 50% LTV? Come on, right? And so they can't do it because I would bet money that it doesn't exist. So I can't prove it because they won't share that information with us. They just say it as if it's the truth, which I don't believe. So with all that being said, I'm really grateful for these private companies that have looked at some of the guidelines and are making more sense, and they are making a bigger box for our borrowers to fit in which again, I always think it's really interesting that what is it? The average LTV on a non-QM loan is in the 740s, not LTV, sorry, FICO score. I mean, these are really great borrowers for the most part. They're not doing anything risky or crazy. So it'll be interesting to see how that continues to evolve but at least we can help more borrowers. That's what I think is so exciting is we can help more people. How's that? Try to look excited when I say that. Geez, Kevin, are you alive? Come on.
Help more people buy homes that aren't for sale. I know what you're saying. I know what you're saying. But anyway, no, I agree.
Yeah. Yeah. I mean, it's a big deal, guys. It is worth getting in the weeds on this. And a few years ago, not too many years ago, by the way, we would be teaching an NMLS class and we would ask, how many of you are doing non-QM loans?
Yeah, and no one was.
And the numbers were so shockingly low. And,
yeah.
And at that point, even I wasn't doing tons of them, right? It was still like, so we've come a long way and we need to keep pushing that because again, how do we help our borrowers? That really needs to be the bottom line for all of us. How do we help our borrowers? And it's the narrative that comes from not just the media, but the regulators is rate, who has the lowest rate. I just think that is the biggest travesty because the lowest rate does not help you. The best strategy with a competitive rate helps you. So working with somebody who knows what the heck they're doing, who can give you good advice and guide you in the right direction, that is beyond measure. That's valuable. So that needs to be the push that we need to evolve away from, oh my God, I have the lowest rate. I literally won't talk to those people. I mean, they can go work with somebody else who doesn't give them great advice and see what happens.
Yep.
So, yeah.
Like the guy that goes to the hardware store and wants a shovel, and they're like, how much your shovel is? $20. He goes, oh, but the hardware store down the street's only charging $10. And the guy goes, well, why don't you go down the street and get it for $10 then? He goes, because they don't have any.
Exactly. Okay, so this morning, I thought this was really funny. So this morning, I sent Kevin, I get this update, you get these little pop-ups in the news feed from BBC News. And it says, breaking news, explosion in Moscow kills senior general who was in charge of Russia's nuclear protection forces, state media say. So this was before Ukraine took credit for that. And Kevin's response was, he didn't pay his next door neighbor's son 20 rubles to start his car in the morning, which took us back to Rob Chrisman's joke the other day, which I would like one of you to share with us because I thought it was funny.
I'll let Rob take that one. That was his joke.
I was talking about how it was an opening paragraph in my commentary. For those of you who don't subscribe who are on this call, www.robchrisman.com. It's free. There's a joke once in a while. But I was talking about the plethora of memberships that an IMB or a bank or a credit union or a broker might belong to. There's the MBA, there's regional organizations, there's state organizations, there's CHLA, there's the Mortgage Collaborative, Lenders One. I mean, the list goes on, and you can't belong to everybody. It gets very expensive to belong to all these entities. But I was talking about membership, and I led off that paragraph by talking about, I lived next door growing up to a member of the mafia. He wasn't a bad guy at all. In fact, every morning he paid me $20 to start his car. Right. And so I got some good comments about that one.
And Kevin said that not everybody gets that joke. So just in case you didn't get that joke, because it was really funny. Okay, the mafia boss is having some kid start his car just in case somebody rigged it to blow up overnight. Okay.
I.e. the guy in Russia with his got blown up, same thing. What was he thinking?
What I thought was interesting. I mean, I haven't read the story, so you're talking to an unarmed guy. I don't know why this has to do with mortgages, but
it was funny. We need some levity, Rob.
The original headline I saw was this guy was in charge of Russia's chemical weapons. Well, wait a minute. I didn't think anybody was supposed to have chemical weapons anymore, but this guy's was supposedly, I guess, in charge of them. And then
Oh,
it was
right,
him
the
and an
BBC said
aide.
nuclear chemical,
I thought it was chemical, but maybe that was wrong.
or maybe
And then the second thing was they were walking out of a building and the bomb went off in a parked scooter.
Yeah,
what?
Parked scooter. Yeah.
that was a real story.
Yeah.
Oh
It,
my
it
God.
was almost reminiscent of what was it, 4 months ago or 6 months ago when these Israelis rigged all these pagers.
Yeah,
Oh my God, that was unbelievable.
Wasn't that something?
That was unbelievable. I
brilliant.
I was blown away by that.
And
Yes.
then
Blown away.
they
Blown
rigged all
away.
the walkie-talkies just to catch all the people that didn't catch the first round.
So Michael Simmons is confirming it was chemical. So BBC's little pop-up said nuclear, but I'm sure it's an evolving story. So chemical weapons, great. I mean, who would have thought Russia had chemical weapons? I mean, they play by the rules most of the time. So why, how would that happen? Okay, so I want to circle back because Kevin put in the chat, it was WAFD Bank, WAFD Bank. It used to be Luther Burbank, and when they changed their name, we had a pretty funny back and forth in our office chat about who came up with that name and why. It was pretty hilarious. With that being said, I'm glad that Kevin said that because he and I were talking earlier. I just locked a client who's doing a cash out refinance with a 696 score. Now he has a low LTV and he does but a 696 score, so not great, but in cash out. I locked him in at 6 and an 8 last week. 6 and an 8. And
Yeah.
so it's under this program that we have with Chase and
WAFD. Did Luther Burbank own slaves or something? I mean, why did they change the name from Luther Burbank?
okay, first of all, I have no idea.
I like Luther Burbank. You know
I
what he
did
did,
too.
right?
I thought WAFD was well, I guess I can't say what I thought, but I did say it in an email to the to the office and it was pretty funny. And then Kevin had a hysterical response to all that. So we don't know why they changed their name. It doesn't matter because they have this program that I'm using through Chase, but apparently WAFD has their own version of it. It's capital W, lowercase a, capital F, lowercase d.
Is it like waft? Are you sure it's not pronounced waft? Like,
No,
oh,
you're not sure. We have
I think it's short for Washington Federal, but
they
that's
were
Washington,
waft.
I guess.
oh yeah, Kevin says that because someone just put it in the chat. Anyway,
Oh, makes sense. Waft.
yeah, we have no idea how to say it, and we probably shouldn't be slamming somebody's name. But with all that being said,
I doubt if there's anybody from waft on the call here.
that's probably true. I have not met anyone from. Oh well. Anyway, okay, moving right along. Bottom line is this great program through Chase that is going to serve these underserved markets. Apparently, they also have it at whatever we just talked about, the W word. Okay, so anyway, my
Oh,
suggestion.
you didn't lock, boy, rates went way up today. You didn't lock yesterday? Well, then you're waft.
Yeah.
That's the best use of that word I've ever heard. I think
Oh, the appraisal didn't come in?
you're so waft. I have to concentrate on behaving for an hour a week when we're doing this show, okay?
Mm-hmm.
So thank you for making that even
It's
harder.
kind of back in the old water cooler days when we had nicknames for all the different banks.
Oh, my
Remember Lender One or Bank One, I think it was. And they got nicknamed Bank Once because or Broker Once or something like that. We say, yeah, the joke was you go there once, you don't do it again.
Oh my God. Okay, in more serious news, we do need to wrap up at some point and talk about BOI because was it just last week? So this was the FinCEN rule that goes into effect at the end of the year, saying that you register your businesses, corporations, LLCs, all of it with FinCEN by the end of the year, right? So then a little court in Texas said that's, what did they say? Not constitutional. So now all of a sudden everyone thinks, woohoo, that's off the table. And I told Bill Dallas the only reason that he was excited that it was not going to go into effect was that he didn't want everyone to know how much I own of Dallas Capital. With that being said, I spoke to our friend Bob Simpson, and he confirmed that you do have to fill out that form by the end of the year. It is a federal regulation. He thinks it will stand in, it's going to stand through the next.
Yeah, believe it or not, I know you never believe I do this. I actually read the Texas finding, and as I read through it, I was like, this ain't gonna hold up. Because it's, although I can buy into Bill Dallas's argument in the grounds of if you have a whole bunch of investors backing you, you don't want the whole world to know who those investors are, because they can go after those investors to get them to back them also. And it's kind of like, well, do you really need the whole world to know your business? So that part of the finding, or the holding up of the law, I got. But the argument that, hey, these people are using this to hide and do all this illegal activity, that's why it needs to be broken up and stopped. It's a very interesting argument, and that's why I kind of read into it. Yeah, but as I read into it, I'm like, yeah, this is a long stretch.
Rob?
So along those lines, as you guys know, I put ads in the commentary, and oftentimes an investor, or I should say a advertiser, will require paperwork be filled out, which I'm fine with filling out. I like whatever. Well, one particular vendor recently asked me for my DUNS number, which I never even heard of, a DUNS number. So I Google it. Actually, I use DuckDuckGo. DuckDuckGo'd it.
It's not on the bottom of your guns?
What's that?
It's not the serial number on the bottom of all your guns?
No.
That's
But the DUNS number is created by Dun and Bradstreet.
what I
Oh,
thought.
DUN number, yes.
Yes.
DUN number, yes. And so I'm like, what the hell? Excuse my language. So I type in, like, I go to the website, Dun and Bradstreet,
Yep.
and I type in the name and where I am or what I do, or and I'll be damned if Dun and Bradstreet hasn't assigned me a number.
Yep.
Which it's like, what the heck? How'd that, talk about Big Brother. So they know something, the state knows something about me. Now this new entity, the form that you're talking about, they'll know something. All these different entities out there.
And the Chinese know everything too, Rob. Don't forget that.
What's that?
The Chinese, they know everything about you also.
Yeah. I mean, Apple phone knows exactly within a meter or two of where I am.
Yeah.
So
Anyway, so
the flip side of that is I have a friend who has a company or is involved with a company, and there are a bunch of players in the back end who are manipulating things and doing all sorts of shenanigans. And this will be great for them because they want to know who the heck is behind the scenes yanking all the chains. Okay, so we have a post from Linda again. Thank you, Linda, for showing up today and being so helpful.
Yeah.
In light of, and this is from fincin.gov/BOI. In light of a recent federal court order, reporting companies are not currently required to file beneficial ownership information with FinCEN and are not subject to liability if they fail to do so while the order remains in force. However, reporting companies may continue to voluntarily submit beneficial ownership information reports. And I think that the concern is that court order is not going to stand. And when it doesn't stand, then what? So just
Then what? How many days do you have to get that done? Because there's gonna be a mad rush to get it done in one day. Their systems are gonna
always,
crash.
things constantly change. They're just constantly changing. All right. So with all that being said, kids, this is our last show of the year. The first time since 2020 that we've had more than 2 weeks off, or had 2 weeks off in a row. The because we're going to be Tuesdays on the 24th, Christmas Eve, and December 31st, New Year's Eve. We're not going to be seeing you. It makes me sad, but you get an hour of your week back, and we adore you, and we thank you and Rob, all of our guests who've been with us all year, everyone who shows up week after week and sees us on YouTube. We want to say thank you to Rob.
And we're looking for sponsors.
We are looking for sponsors for sure. I want to say
Kevin
thank you
and Audrey
to Gina Pasquini and Jason Bellevue, who are behind the scenes doing flyers and doing our YouTube channel. It's a pretty thankless task. I mean, I thank them, but anyways, thank you to everybody for everything you've done
Yeah.
this year.
Thank you for our speakers too. We had some great speakers last
Oh
year.
my God, I had I sat down and wrote them all down, like just to see what it looked like. Holy moly, we've had great speakers this year. And so yes, Rob, you're on the list, baby. So thank you to you and Robbie, and everyone have a wonderful holiday season and a wonderful new year. And we will see you back here, bright-eyed and bushy-tailed in January with all sorts of new and helpful information.
And by then, Audrey, I want you to look up the origin of the word shenanigan.
Oh, I love the word shenanigans. So I will. I'm a little scared now, but
I have a good idea of that origin.
really?
All right.
Yep.
All right, kiddies, have a great, great holiday, and we'll talk to you later. Mwah, kisses.
See you guys.
Thank you guys.
Bye.